Namaskar, hello and welcome to the Banker Se Charcha Finance and Economy Show. I'm your host Ashish Kapoor. In today's festive special episode, we chat with a very special guest and a senior executive leader on his fabulous 4-decade-long housing finance career with HDFC Ltd. He's someone who's coordinated momentous special projects, including the business plan for incubating HDFC Bank after the 1991 economic liberalization, licensing with the Reserve Bank for in-principle license approvals, as well as facilitating incorporation of the bank. Another crucial project that he coordinated much later was exploring merger synergies between the two institutional siblings. It's my absolute pleasure and privilege to host Mr. Conrad D'Souza, who served as a member of the executive management at HDFC Ltd, the chief of its investor relations for decades, and member of the risk management committee of the board till its recent merger with HDFC Bank. Conrad has handled multiple responsibilities, including treasury, investor relations, corporate finance, planning and budgeting, resource mobilization, and asset liability management, besides, of course, being the coordinator of the HDFC Bank project in the early 1990s. Conrad has also undertaken assignments with multilateral agencies and corporate groups across Asia, Africa, and Eastern Europe. He's been a faculty member at leading international institutes like the Frankfurt School Academy and continues to be an independent director on boards of global companies. Welcome to the Banker Se Charcha podcast, Conrad.
Thanks, Ashish, and for your very generous introduction and nice catching up with you again on your show.
Yeah, wonderful, sir. So without much ado, let's start with the cues. Conrad, with your due permission, I'd like to take you back in time to your early career days in the 1980s, where you kind of strive for a fine balance between work life and sports. I'm told you were a budding field hockey player and played for Bombay teams at the university level. And in fact, I believe one of your seniors was former India hockey captain and coach Cedric D'Souza, fantastic player, whose role as a goalkeeper was obviously to prevent any goals, while your aim was to keep scoring goal after goal, be it hockey or in professional life. So I wanted to ask, how did you juggle your first job after completing MBA from the university, playing and captaining hockey teams along the way, and then continue to study further for your MCOM, that is your second master's degree?
So, Ashish, those were certainly wonderful days when you had a lot of time on your hands and therefore you engaged in various activities, sport, music, reading, playing pranks, treks, picnics. But obviously, studies was not non-negotiable, and therefore you had to juggle your studies with all these other activities.
Right.
And I guess at some stage you had to prioritize your activities. At the same time, one recognized that one had to be versatile as you go along. And I always preferred a team sport. I played a lot of sport, but I preferred a team sport. And
Right.
probably because of my, holidays in Kuwait, where my father worked, and I used to spend my holidays there, I got a chance to play with different teams in the league there, practice with them. And these were teams of expatriates. So it not only helped me improve my game in hockey, but also gave me the first insight into meeting people from different nationalities, which helped me in a big way later in my career.
Right.
So hockey it was, and of course, I got selected for state junior teams and university teams. But when I went to do my MBA, it had to stop, and for a couple of years, I gave up the game. I focused on my studies. But having got back, got my job, I said, let's, start sports all over again. But obviously, it was never the same because by which time, you have missed out on a couple of years and there are other things on your mind. But I
Right.
was lucky to join HDFC, which was a, a startup. So it was a lot of hard work, a lot of commitment to the time at work. But at the same time, it was a company which encouraged sports, and therefore even at the job we had this work-life balance because Saturday afternoons and sometimes even Sundays was devoted to playing different kinds of sports, either indoor or outdoor, depending on the weather. And I think that sports activity in the company continued till the very end. And like I used to always say, we work very hard, but we play and party even harder. And I think that was something that enable us to work, contribute entirely to the organization, but the organization also gave us that space to pursue our interests and activities.
Right. So work hard and party even harder. Coming back, you joined the housing finance behemoth HDFC Limited as a management trainee, I believe, in mid 1984. Which, as you rightly said, HDFC was a startup, 6-7 years of existence till then, and Madam Indira Gandhi was still our Prime Minister. So, what would you say were the key features of the Indian market, mortgage market, and the key learnings of the 1980s and 1990s?
So, 1984 seems very, very long time ago now. But yes, I think it was a very different world in the financial markets. In fact, mortgage finance never entered the country for the first 30 years of our independence, and it was only around 78 when HDFC began operations that mortgage finance began in this country. And I joined in the very early days. So, we had to literally innovate and create a housing finance system at that point in time. And I think the kind of passion and zeal that we brought to our work continued right through over my career. And I think HDFC was a continuous learning process. Uh, at the start, I think the entire focus was on service because that's the only area we could compete with the big boys. We were not known in the market. We had to raise money at higher rates than what others would do. And therefore, our focus on service was a competitive edge, and that focus has never wavered over the entire existence. Secondly, we were financing a home, which was the single largest possession of a house, a single largest asset for an Indian household. And getting the relationship with the household or the customers right at that time meant a lifelong partnership with that customer. And I guess as we got into other areas of activity as a group, that relationship worked very, very well for us over the years. The next area was what are the kind of people that you need to run this organization. And we generally picked up freshers or people very, very early in their career because they came in without any baggage. And they learned the HDFC way of working and delivered as a team. And like we always said, we are a great team, but we are devoid of stars. And I think that continued right through. Also, when you look at the financial environment, it was entirely regulated. Interest rates on borrowing as well as interest rates on lending were regulated. So your spreads were kind of determined by the regulators. However, what differentiated you from the others was what are the volumes that you do and how efficiently you do that. And therefore, what we used to always say is that the winner is the one who recovers the maximum money, and the winner is the one who does it at the cheapest possible cost, because that is where you had the flexibility to become more profitable than your counterpart. And I think that focus helped us in a big way. And when you looked at my entire career with HDFC, I think number one and number two was always asset quality and cost efficiency, which helped us because we always worked that way right from the beginning, even when we were a monopoly. Another big area we learned is from the 1980s saw a lot of chaos in the savings and loan associations in the US, which is basically what the mortgage industry was called. And they were ALM led failures in this SNL industry, primarily from the fact that they were borrowing short and lending long. And we recognize that in order to be a sustainable, for it to be a sustainable business, we need to ensure that we get the right kind of funding, not only at the cheapest cost, but also at the right term, and not take too much of risk on your books because your counterparty is a retail customer who cannot absorb shocks on interest rates or any such other risks on his books. And therefore, whilst we did lend at fixed rates and borrowed at fixed rates, when we moved into a more deregulated market, ALM was always the key to determine how we run the business. We did get long-term money from overseas, but we recognized again that the foreign exchange risk is not something that can be passed on to retail customers. And as a result, we always ensured that if we borrowed overseas, we found an appropriate swap so that our landed cost was always in rupees, and we never were exposed to foreign exchange risk in the early days. So ALM was a very, very important learning for us in those early days. And lastly, if you want to be in business for the long term, ethics is very important. So a very, very high focus on ethics, and any slippage in that area means you were shown the door. So, I would summarize it by saying that in HDFC of the early days, it was learning by doing. You were allowed to make mistakes, but you were not allowed to repeat mistakes. So that was broadly the way we went about the business and grew the business. And finally, I may say, what it led to, putting all these together, what it led to was that we created a wonderful team of ordinary people uh, who created an extraordinary institution to serve ordinary Indians. So I don't, like I said, we were devoid of stars, but worked very well as a team and uh, delivered to our end customer in the most efficient manner.
Absolutely extraordinary team it was. Wait, Conrad, you were also the coordinator and, if I may say, the key sutradhar of the HDFC Bank project. Who actually formulated and submitted the bank's business plan to the regulators. Could you talk us through the nitty-gritties of the discussions in HDFC Limited in the early 90s on establishing a new bank? Of course, we've heard legendary tales of how Mr. Deepak Parekh persuaded Mr. Aditya Puri to leave Citibank Malaysia to helm HDFC Bank at less than half the salary or thereabouts, but it seems the Tamal Bandapadiya's books. And I believe Mr. Puri's book, Aditya Nama, has many other fascinating anecdotes right from the time he came on board. But can you please throw some light on the multiple discussions and work happening in parallel at HDFC Bank project at your Raman House offices from 1991 onwards, the multiple discussions with the regulators till such time the in-principle approvals were received and the bank was incorporated, I believe, in end August or September 1994.
So that was a very interesting phase. And like you said, probably not much is known of that phase in the public markets because probably some of the books don't cover that phase. But let me put it this way. In 1991, the Indian economy was going through a crisis. And we are all aware of the subsequent happenings, the financial sector liberalization, etc. So it was during that phase that there was talk of the government possibly looking at opening up the banking and the insurance sector. And a couple of us who were running day-to-day operations were pulled out and put into a group called Management Services with a specific objective of, besides doing the routine corporate planning strategy and all that other stuff, we were also asked to work on two projects, insurance and banking. And I specifically was asked to work on the banking project. It was probably a surprise, a little bit of a shock. It was also scary because, very honestly, one never anticipated something as big as this. We really, at least I personally, did not know much of banking. And therefore, it was really totally out of your comfort zone. But it also involved a lot of hard work. It involved almost starting from scratch, understanding the Banking Regulation Act, reading banking circulars, understanding what is SLR, CRR, priority sector, all that stuff, meeting with various individuals, experienced bankers, retired or even current regulators, and putting together what we thought we need to do as and when the market does open up. So it was probably a year and a half of, I would say, research and understanding that sector. And then towards, and also let me say that within HDFC, we did not have too much of banking experience. So we had to source from outside, and you didn't have the internet and those facilities. So it actually meant physically contacting people, reading, sitting in libraries, and a lot of that kind of stuff. But sometime in early 1993 is when the RBI put out guidelines for opening up invitations for private sector banking. And we put together our application by the end of February. I think it was 20th February 1993 when we put it in. So it was a couple of months, but like I said, we had worked for almost a year and a half before that. So it was now putting it all together and submitting it to the RBI. We understand there were about 140 applications received by the RBI at that point in time. And HDFC was the first to get the in-principle approval. That was in July 1993, about 4 to 5 months later. And you know, at that point in time, we then had to begin working on whatever were the conditions of the in-principle approval and the setting up of a proper company and a bank. Now, some of the features of our application to the RBI, firstly, was that we proposed to set up a wholesale bank, very interestingly. And if you look at the bank as it is today, it's very different in the way it operates. But that also came with a background. You see, we companies were allowed to borrow their needs for their project needs from the banks for working capital, but the housing colonies which existed at the plant sites were not financed by either the DFIs or the banks, and therefore they took money from HDFC. So we had built up a whole lot of corporate relationships, and we thought now the bank will be able to meet a much broader need of this corporate entity. So wholesale banking, we decided to we had planned to open 7 branches in 3 years. I think that's the number they opened per hour just now. It was to be technology advanced, so on having the headquarters at Mumbai, although the guidelines said it should be outside a city in which existing banks have headquarters. And finally, a couple of requests were made to increase the voting rights, the maximum voting rights, which at that point in time was 1%, and to split the role of chairman and MD. So these were some of the features of the application. We also had to put together people now to start working on it. So Mr. S.S. Thakur and Mr. Vinod Yanamani, who unfortunately both are no longer with us, they joined us. Mr. Thakur was the first chairman of HDFC Bank, and Mr. Yanamani the first ED. And that was the project team which helped in identifying premises, identifying people, putting together the regulatory internal structures, working on the capital raise. And mind you, it was 40 years since the previous bank was set up. So Deepak Swatharekar, who was the managing director of HDFC, and myself used to visit RBI, I think, for almost 2 to 3 weeks on a daily basis, to sit and kind of go through the memorandum and articles of association, because it was the first time RBI would be clearing it in 40 years. So it was new for everyone. And having got through that phase, and sometime around middle of 94 is when Aditya, came in and then took on, building up towards the operations of the bank. So as I said, we were the first to get the in-principle approval, but we were not the first to start operations, because we had to get these clarifications, and some of them required amendment to the Banking Regulation Act, which did happen over a period of time. But when we actually started operations in 1995, I think one of the big differences for HDFC Bank was we did an IPO right at the start, issued shares at par, got retail participation. The issue was oversubscribed 55 basis points, and I'm sure we have a lot of happy shareholders since then. And of course, the moment the bank started operations, I pulled back, went back to my day-to-day work at HDFC. But I must say that in my wildest dreams, I would not have expected the bank to deliver the way it has done over the last 3 decades. And today, probably my most prized possession is the physical share certificate, which was issued to me as a subscriber to the memorandum of association of the bank. So that's the lasting memory of that project.
Absolutely. Amazing insights. Absolutely. Who could have imagined that HDFC Bank would become the crown jewel of Indian banking within 25 years of its inception? Now, as you said, after your stint across, coming back to HDFC, after your stint across business operations and chief of the management services and the special project, you took over as the HDFC treasurer, I believe, in mid-2000s, sir. What were some of the key challenges faced by you in your role as HDFC treasurer? And 2, if you could narrate the impact of the Lehman Brothers collapse and the global financial crisis in the Indian context. People remember very little about those critical few weeks when there was absolutely no liquidity and banks were just sitting on cash.
So it's very interesting. I spent 10 years in Treasury, and I moved to Treasury around 2000. Very interesting times because
Mm.
uh, somewhere around 1999, the banks started looking at housing finance directly. Until then, they were not allowed to do housing finance on their books. So they
Right.
all promoted separate housing finance companies. But that was the year 99, 2000, when they got into uh, housing finance.
Mm.
Interestingly, it was also the time that the floating rate mortgages began. So now here we are sitting with a 100% fixed rate book, and we have to move to a floating rate book. And to add to that, 2000 to 2005, rates actually collapsed. Mortgage rates came from a high of 14% all the way to 7%. So it was literally learning on the job because we had to face, first of all, prepayment risk, which was huge because every new entrant bank was targeting our customers to say, I can offer you a floating rate at a rate which is lower than your current fixed rate with HDFC. And going forward, rates are expected to go down, so you will get that entire ride by moving to a floating rate. And therefore, we had to protect our book. At the same time, look at funding the new book on floating rates. So it meant a lot of things. It meant, first of all, launching a product which enabled customers to convert existing fixed rates to floating rates. But that was on the asset side. On the liability side, we had to renegotiate our contracts with our lenders because until then it was all fixed rate borrowing, fixed rate lending. And suddenly now we are moving to floating rate borrowing. And mind you, we still have a bond market which is practically fixed rate. So, but we didn't have a swap market at that point in time, which you have today. So we had to renegotiate our uh, our bank loans. We had to renegotiate with the insurance companies. We landed paying, in some cases, stiff prepayment charges. But that itself was a great understanding of how having a very good book, very comfortable asset quality, and suddenly the prepayment risk, the interest rate risk
Mm.
hits you in the face. Rates are coming down all the way from 14 to 7, and you are stuck with these fixed rate liabilities, which you need to either repay or prepay or renegotiate. So that was one big challenge which we faced. It was also coupled with enough of liquidity. So
Mm.
banks were happily uh, you know cutting rates on mortgages because on the other side, the corporate lending had gone down.
Right.
Corporates, the better corporates were now accessing other markets, including the ECB market. So that was something which I would say a baptism by fire in a sense. But it was a lot of learning as you went along. Uh, then there were some interesting times also because that was the time when the ECB markets opened up. We did our first ECB in the public market, in the general markets, not just multilateral. Uh, Two marquee deals, which I would always cherish: the zero coupon foreign currency convertible bond of $500 million, which was the largest in 2005 in Asia, and which converted entirely. So that was one of our, I would say, flagship deals during that period. We also had done a floating rate note in 2002, which was a struggle selling because it happened immediately after Kargil. But it was structured in such a way that we finally were able to place it out, get the money in, service it well, and it also for that year got the Euromoney Indian Capital Markets Deal of the Year. So these were, I would say, two of the high points of that period on the ECB market. And of course, increased overseas funding meant, you know, managing foreign exchange risk in a much larger scale,
Mm.
managing interest rate swaps on foreign currencies. So that again became a part of our day-to-day life. Coming to the global financial crisis, I think when it hit us, I don't think the first 2, 3 weeks there was too much of an impact. It happened somewhere around mid-September. But
Mm.
the real impact locally was in we did not have any bank failures or people or companies going bust, but certainly from a there was a total credit freeze in the first week of October. And as HDFC, when we were unable to access a single rupee for 3 full days, and that was tough because there were two parts to it. One was, of course, the bank loans that were maturing, which you
Right.
could negotiate and try to roll it over. but then there were market-related borrowings, which you just could not afford to miss out even by a single day because it could have an impact on the market as a whole, but also your ratings and such stuff. So what it meant was literally traveling around the country. That's the time I probably traveled to Patiala, Mangalore, wherever headquarters of banks are located, because the banking system had come to a standstill, and the only decision maker in the bank was the chairman. So the only person you could meet or discuss was the chairman. Everyone else was just putting his hands up. Uh, but fortunately, I think there were among the bankers of those days some practical guys who said, you know, if we, why we'll at least not give you additional money, but we'll at least roll over or retain your facilities. And I think that helped us tide over that crisis.
Right.
One of the big advantages we had, in which we never recognized the value, was that we always had a retail deposit window. And that retail deposit window, in very easy liquidity terms in the wholesale market, we had kind of demarketed to a certain point because you're getting cheaper money somewhere else. But that was the time we realized that with the wholesale market coming to a standstill, all you need to do is now motivate, reactivate your agents network, incentivize them to do, and so we literally had to, again, have a very, very big campaign. All our senior people met big agents one-on-one. And I would say that quarter, that's the last quarter of calendar 2008, almost 100% of the incremental money came in through deposits, and that was the saving grace for us. So it was another lesson learned, was that never discard deposits even in the most easy times, because you never know when you want to need them, and it's very difficult to shut a deposit window and then open it up again. So keep it going and ensure that it always is a certain percentage of your funding. So Treasury was fun. But like I said, at HDFC, Treasury was never a profit center. It was always the objective was to raise money at the cheapest possible source with the right kind of maturity. And the ultimate aim was to bring down the cost of lending so that the mortgage finance business grows.
Wonderful. Great. I believe you've also been involved in the Synergies project with HDFC Bank. Could you talk us through the we know the rationale of the merger from the bank point of view, as well as the financer point of view. But I wanted to ask more about the emotions, about when the parent company kind of gets merged with the grown-up child. If you could talk us through that, please.
Yeah, so I think the rationale for the merger has been well articulated over the last 18 months. So I'll not spend too much time onto it, except to say that, we had become very large. We were a single product company as HDFC. Today, when the RBI looks at an upper layer, NBFC and calls it big and subject to much more stringent regulatory oversight, 50,000 is the kind of threshold, 50,000 crores. We were already at 6 lakh crores, so we had far exceeded that. Secondly, the bank, being a part of the group, did everything except mortgages. And at some stage, we had to look at it as a consolidated entity so that from a customer interface, they get everything under one roof. And I think the merger achieved that objective, because not only did the bank get access to the mortgage business, but it also now is the holding company for insurance asset management. So it can leverage its distribution capacity, it can leverage its digital capabilities, and therefore grow the business much, much faster. And we thought, I don't think we had to merge because we were short of capital or because we had asset quality issues or anything of that sort. It was just that the scale had become so large, and the regulatory arbitrage had kind of come to a very, very bare minimum difference. So there was not much of a difference between. And as far it was certainly an emotional, I would say, roller coaster. And like you said, as a parent, you always want your child to do better than you. And I think that's been the philosophy. And we are happy to see that the parent, the child has grown and hope and should outshine its parent in due course. And I think, as all of us, as we retire into the sunset, we wish that HDFC Bank continues this legacy for a long, long time. And more importantly, the brand HDFC is taken to even greater heights.
Right. So one final question before we bid you goodbye. How are you spending your time after 4 decades at HDFC Limited? And any unfinished agenda or plans of writing a memoir or a book on your journey?
Actually, it's still just a couple of months or 3 months since I'm done with HDFC. But I think one of the big things, I get more time to myself, save a lot of time on travel to office, which itself, in Bombay, given the traffic, it's a couple of hours, at least 3 hours of travel time saved per day. It gives you more time to spend with your family, catch up with friends, you catch up with some of your teammates who you missed out all these years. Start doing some of the simple things that you missed out when you were busy at work. My board engagements keeps me mentally occupied and also gives me an opportunity to contribute and share my knowledge. In fact, I've intentionally joined boards outside the financial field or financial sector, which means it's outside a comfort zone and therefore requires you to put in that much more effort and understand different businesses. And uh, and I think one big advantage of COVID, I know COVID was quite a mess for all of us, but I had a work style which meant I never work from home. I, in fact, when COVID hit us, for the first 6 weeks, I didn't even have a laptop with me because I just left all my work in the office and came home. That was the way I worked. But I think COVID enabled us to set up work from home protocols in the house. So
Right.
today, when I need to work, I very comfortably transition. Probably if COVID had not happened and I had retired and continued the way I worked in the past, I would have struggled to kind of get adjusted to a post-retirement job. But I guess I did, like you may be aware, during COVID, we did a whole equity raise. We did virtual roadshows sitting on this very desk where I'm sitting right now. So life has changed in that sense, but certainly,
Absolutely.
uh, also mentoring youngsters is something that I do separately outside, but it gives you more time for such stuff.
Wonderful. So it was an absolute pleasure chatting with you, Conrad. Thank you so much for gracing this podcast and sharing all the wonderful, fascinating insights. That'll be
Thanks,
all for
Ashish, and wish you all the very best. Yeah.
that'll be all for today, ladies and gentlemen. We come to the end of this special episode featuring Joseph Conrad Angelo D'Souza, Sutradhar of the HDFC Bank project, a long untold story of how the crown jewel of Indian banking was incubated. Keep watching and do subscribe. I'm Ashish Kapoor signing off on Banker Se Charcha. Until next time, namaskar, thank you, Jai Hind.
Thank you. Thank you.